Good morning students, this is CIPA. In the last class, we have discussed about SA-200. Okay students, please like, share and subscribe to my YouTube channel and also join my Telegram channel which I am going to put in the description box for the purpose of downloading the notes. Okay students, in the current class, that is class number 5, we are going to discuss SA-210, that is the agreement to the terms of audit engagement. Okay students, let's see the video. Okay students, agreeing the terms of audit engagement. See students, the client will give appointment letter. The client will give an appointment letter to the auditor. See students, the client will give an appointment letter to the auditor. In turn, the auditor will provide engagement letter. In turn, the auditor will provide an engagement letter to the client. See students, first the auditor will take appointment letter. See, client will provide appointment letter to the auditor, and in turn auditor will provide engagement letter to the client. In turn, auditor will provide engagement letter to the client. In that engagement letter, there will be terms and conditions of the audit. Why the terms and conditions are provided in the engagement letter? To avoid dispute between the auditor and the client in the future. See students, in the engagement letter, the terms and conditions are provided because to avoid dispute between the auditor and the client in the future. Okay students, what are the preconditions, premise and pre-assumptions for an audit? Before the audit, what are the conditions that are to be checked by the auditor? See students, conditions put by the auditor before the audit. Okay students, see example, Man Limited is a holding company which is a German company. Man Limited is a holding company which is a German company, and Women Limited is a subsidiary company which is a Indian company. Okay students, so Women Limited will prepare financial statements as per German GAAP for the purpose of consolidated financial statements. Okay students, as per section 143 subsection 2, as per section 143 subsection 2, auditor to express true and fair view on financial statements. The financial statements shall be prepared in accordance with applicable financial reporting framework. Okay students, as per section 143 subsection 2, the auditor shall express true and fair view on financial statements only when the financial statements are prepared in accordance with applicable financial reporting framework. As per section 129 of the Companies Act, financial statements shall give true and fair view only when the financial statements are prepared in accordance with applicable financial reporting framework. Okay students, let's see section 139, appointment of auditor. The auditor will be appointed by giving an appointment letter. Okay students, by combined reading of above section, that is section 143 subsection 2, section 129 and section 139, in our present example we can say that the auditor cannot express true and fair view. The auditor is unable to express true and fair view because the financial statements are not prepared in accordance with applicable financial reporting framework, because they are prepared in accordance with German GAAP. They are prepared in accordance with German GAAP, that is generally accepted accounting principles of German. So it is not as per applicable financial reporting framework of India. So the auditor will not accept the engagement. That is why the auditor should check preconditions of audit, whether the financial statements are prepared in accordance with the applicable financial reporting framework of India or not. So points for preconditions of audit. What are the points to be checked in the preconditions of audit by the auditor? Main preconditions: determine that financial statements prepared by the management are in accordance with applicable financial reporting framework. See students, main precondition is determine financial statements prepared by the management are as per applicable financial reporting framework. Okay students, and other preconditions checked by the auditor are whether the management should be responsible for, that is the auditor should check that management is responsible for preparation of financial statements as per applicable financial reporting framework. that management should be responsible. The auditor should check that management is responsible for preparation of financial statements as per applicable financial reporting framework and design, implementation and maintenance of internal controls on financial statements for preparation of financial statements free from material misstatements, whether due to fraud or error. See students, first management responsibility for preparation of financial statements as per applicable financial reporting framework and design, implementation and maintenance of internal controls over financial statements for preparation of free from material misstatements, whether due to fraud or error. Okay students, next, to provide auditor with all information necessary for the preparation of financial statements. To provide auditor with all information necessary for the preparation of financial statements and to provide auditor with additional information from management for purpose of audit. To provide auditor with additional information from management for purpose of audit. To provide auditor with unrestricted access to persons within the entity for obtaining audit evidence. To provide unrestricted access to persons within the entity to the auditor to obtain audit evidence. What is design, implementation and maintenance? Design means whether the internal controls are in existence, whether the internal controls are following in the entity by the employees or management, whether the internal controls are maintained, that is throughout the period for the financial statements are prepared, whether the internal controls are following throughout the period of financial statements prepared. Okay students, next, principal contents of audit engagement letter. See students, objective and scope of audit of financial statements. What is the purpose of doing the audit and the scope of audit of financial statements? What is the purpose you are going to do the audit? And the scope means whether you are doing general purpose financial statement audit or special purpose financial statement audit. That is what described in objective and scope of audit of financial statements. What is management responsibility? That is the preparation of financial statements as per applicable financial reporting framework and the internal controls are maintained to provide financial statements free from material misstatements due to fraud and error. And management responsibility or next, auditor responsibility deals about to obtain reasonable assurance that financial statements are free from material misstatements. To obtain reasonable assurance that financial statements are free from material misstatements is the auditor responsibility. And also the principal contents of audit engagement letter includes identification of AFRF for preparation of financial statements. Identification of AFRF, that is applicable financial reporting framework for preparation of financial statements. And the form and content of audit reports. What are the points to be included in the audit report? Whether there is a material uncertainty in the going concern, whether that point to be included in the audit report is included in the contents of audit engagement letter. Okay students, in addition to above contents of audit engagement, some other points are also included in the engagement letter. What are there? Let's see. See students, inherent limitations of internal control or inherent limitations of audit, so that the auditor will not detect misstatements due to fraud or error. In some cases, the auditor is unable to detect fraud or error due to inherent limitations of audit or inherent limitations of internal control. So that is why the inherent limitations of internal control and inherent limitations of audit are provided in the contents of audit report. Okay students, and audit fees billing are also provided in the audit engagement letter. The audit engagement letter will contains audit fees billing also, and peer review. The peer review done by the peer review board of ICAI as per CA Act 1949 are also provided in the engagement letter. Written representation from management. When we want to take a written representation from management, whether the management is refused, so the management may refuse in future if you want to take a written representation. So that is why if you have included that in the engagement letter, then we can show that we have included in the engagement letter the written representation from management. So the management shall compulsory shall give written representation whenever we require. So date of audit report will also be included in the engagement letter. Okay, students. Limitation on scope imposed by management. Limitation on scope imposed by management are those charged with governance prior to acceptance of engagement. Limitation on scope imposed by management are those charged with governance before the engagement, that is prior to acceptance of engagement, not to accept engagement by the auditor. If the limitation on scope imposed by the management before the acceptance of engagement, then the auditor will not accept the engagement. If after the engagement is accepted by the auditor, if any limitation is imposed by the management or those charged with governance, auditor will ask the management circumstances for doing so, that is circumstances for putting limitation on scope by the management or those charged with governance. If the limitation on scope will provide low level of assurance to the auditor, then the auditor will perform audit procedures to obtain sufficient and appropriate audit evidence. If the auditor is unable to obtain, sufficient and appropriate audit evidence, then the auditor will withdraw from the engagement if practicable as required by law. If the law permits the auditor to withdraw from the engagement, then the auditor will withdraw from the engagement. If it is not practicable by law, then the auditor will give qualified opinion, that is disclaimer of opinion. Before doing these two possible things, that is before withdrawing from the engagement or before giving disclaimer of opinion, the auditor will communicate with those charged with governance that the auditor is unable to obtain sufficient and appropriate audit evidence due to limitation on scope imposed by the management. Okay, students. See, in the case of recurring audit, that is in the case of recurrent audit means same auditor, that is in 2020-21 the auditor has done the audit, and 2020-22 the same auditor is appointed as an auditor, that is called as a recurring auditor. Same auditor is continued for the next year also. Whether new letter of engagement is required in 2020-21, the auditor has written an engagement letter. In 2020-22, whether new letter of engagement is required. Generally, in the case of recurring audit, new letter of engagement is not required. See students, in the case of recurring audit engagement, where previous year auditor is also auditor of the current period, then generally new letter of engagement is not required. But in the following cases, new letter of engagement is required. That is, new letter of engagement is required in the following cases. See students, there are 7 changes. See students, changes in management. When the management is changed, new letter of engagement is required. When there is a change in ownership, and when there is a change in nature and size of audit, when the change is laws and regulations, when there is a change in AFRF, when there is a changes in other requirements reporting, and there is a change in terms of engagement, and there is a one misunderstanding between auditor and the client. In all the above 8 cases, that is above 7 changes and 1 misunderstanding, the auditor will change the terms and conditions even in the case of recurring audit. See students, in the case of recurring audit engagement, the auditor will generally not change the engagement letter, but in the following cases, the auditor will change the engagement letter. See, there are changes in management, changes in ownership, changes in laws and regulations, and changes in AFRF, changes in other reporting requirements, changes in terms of engagement, changes in nature and size of audit, and misunderstanding between auditor and the client. So students, please like, share and subscribe to my YouTube channel, and for more updates relating to CA final auditing class. So students, join my Telegram channel to download these notes. Okay students, please like, share and subscribe to my YouTube channel for encouragement. Thank you students.